The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for joining me this morning, 9 a.m. Eastern Time. We got about 24 minutes, we'll call it to be exact, until the opening bell, and we got markets in negative territory to kick things off. We got a lower gold price. We got rising yields. We'll kick things off with the S&P. S&Ps, all things considered, folks, right there near record territory this morning. You get the futures down about 12 points, trading at 39.46. Yesterday's close, we zoom in on the action. I'm going to pull up. That's a weekly, actually. We'll take a look at the daily. The dailies, I mean, we're bumping up right against 4,000. We closed yesterday in the futures at a price level of 39.63, within about 15 points of the all-time highs we made back on March 18th. Currently this morning, we're off about 1/3% in the S&Ps, trading at 39.46. Tech stocks down about 0.6% right now in the NASDAQ 100, 12,865. You're about 1,000 points off the highs we made in the NASDAQ 100, going back all the way to February 16th. Remarkable how time flies. You're talking about 6 weeks since we were up there at 13,900 in the NASDAQ 100. You get the Dow. Yes, we did. Dow Futures making all-time highs yesterday, 33,134. We're backing off those levels, negative 47 points, barely negative in the Dow, barely negative in the Russell by about 1 point. Critical area for the Russell. I mean, look how we've bounced, right? We're in this channel line all the way from the market lows, going back to March and April. We've bumped along the bottom. We've bumped along the top. We now break above that channel line, and we've bounced once, twice, 3 times. Do we bounce 4 times off this channel line in the Russell, or do we trade back lower? We're bumping up against that level right now in the Russell. The Russell trading at 2155. The Russell volatility, you're talking about a 200-point range on these accelerations, higher and lower in the Russell. All right, commodities. We got Bitcoin flirting with 60,000. The high print on Bitcoin, 61,255. Bitcoin this morning, we just hit 60,000, I believe. Yes, 60,065, putting it back on a 15-minute. There's your acceleration about 8 a.m. this morning. Above that mark, Bitcoin flirting with that territory. We have a little bit of Bitcoin news. Somebody was saying that you can use Bitcoin for transactions this morning. We'll pull them up in a moment. We got crude trading lower, just under $60 as we speak. We'll call it $60 even, down to $1.54 in crude. You got the metals trading lower as well. Gold down about $30, catching a little bit of a bounce, only $6 off the lows right now, but quite the acceleration in gold for this week to kick things off. Gold's down $30. Silver's down 67 cents this morning. And notes and bonds. The trend continues, folks, getting a little bit of a reprieve in terms of down 10 ticks at 131.01. We were all the way down at 130.26, though, in that 10-year. We're looking at a yield right now of the 10-year right at 1.75%. Lots of headlines out here. Why not? We'll start it off with, we were up as high as 1.77%. You look at this 10-year. Let's talk about it, because this is a big one, folks. The market, of course, all over what's happening with yields. You put it on a 3-year weekly. Now, originally, when we back down to this area, I mean, the natural area, right, where you might be able to find a little bit of support, areas of resistance often can turn into support. You back things up to the middle of 2019, or maybe the later half of 2019 in September. We had a high of 132.13. In October, we had a high of about 132, we'll call it. We've just blown right through that, folks. Not sure that that's going to be the area of support, as now we're flirting with a 130 handle, 131.15. As I mentioned, the high back here was 132.13. So we look to be below that level. The next spot for a natural pullback for this 10-year note, you're talking about basically 128, which is the lower boundary line of where we were towards the end of 2019 before things really accelerated towards the beginning of 2020. You're talking about potentially a 2% yield. When we're flirting with 1.77%, you better believe that that could be the next stop, when really what's in between right now, 131 and 128, where it was a one-way move, that's the lower part of this consolidation. And boy, we get below that, Watch out, folks. 117.13. It was a one-way trip from the end of 2018 to September of 2019 when we made that run originally. Checking out the VIX this morning. Volatility index right now, VIX. The VIX, there's your 3-year weekly. Talk about some volatility in the last year. There's your daily. 1868. We make a low on Friday of the VIX. That's a post-COVID low in terms of anywhere that we've been. We make a low of 1868 on Friday. Interesting, right? Especially with all the stuff going on with Bill Hwang and Archegos, the collapse, billions of dollars, that we make a low on the VIX, as in we got more going on than that one family office. But boy, we're going to get into some of that this morning because it is just interesting in terms of leverage, in terms of lack of regulations, and in terms of the carnage that he is able to dole out. And I almost want to tease it now. We're going to get into that after the second break to talk about what they have going on because, boy, talk about leverage, talk about taking down some Wall Street titans to a big degree. S&P is trading at 39.46. Let's take a look at some of the tech stocks this morning as we get about 20 minutes to go until the opening bell. You got Amazon shares so far trading pretty much flat, 3,059. Amazon was up yesterday to about 3,080. We got Microsoft shares trading a little bit lower this morning with tech stocks down a little bit. Microsoft trading at 233.70, pulling up a daily on some of these charts. I mean, look at Microsoft, right? I kind of drew this line of an area of maybe support, resistance. We've accelerated above that area. Microsoft basically chopping around between about 230 and 240. Google shares so far this morning. Google basically flat. We got a bid ask spanning the close of yesterday. Google, same thing, just consolidating right near the all-time highs. Quite a different story when you look at a chart like Amazon, right? Amazon, right near the bottom of this consolidation. $3,000 looks to be the bottom level. Nice round number, putting in a bid in Amazon. Looks to be if we get below that level, you got buyers, and it might be rightfully so, folks. I mean, if you're looking to be a long-term holder in a stock like Amazon, and you're basically able to get into Amazon at the same price that you were trading at 9 months ago, you've had quite a consolidation. Amazon probably poised to trade higher at some point. We had quite the acceleration from the lows of $1,626, I believe. Let's back it up on the 3-year weekly to see where we were at the lows. The low of COVID, there it is, 1626, folks. And then you accelerate to 3,500. Makes sense. We got a little bit of a consolidation after quite the run it's had. But boy, like I mentioned, if you're looking to build a position, doesn't mean you'd ever step into it completely, folks, because we got a market sitting at all-time highs when we're talking about 10 million people that we're missing from the employment rolls. We might see some negative market action. All the stocks would suffer if that's the case over the next 2 or 3 months, but nonetheless, Amazon, strong stock, and you're talking about, as I pointed out, you're trading basically $500 off the highs we made last August, and you're trading at the same prices we traded at as recently as 9 months ago, July, at $3,075 for Amazon. What else we got going on? Checking in some of my favorite stocks, Disney shares. Pulling it back on the daily, we got Disney shares basically flat this morning at 184. Disney off marginally yesterday. Let's take a look at some of the other stocks. McDonald's. How about this? So we got McDonald's in my newsletter, Rocket Equities and Options. It's been quite an acceleration, folks, and something you want to think about, right? McDonald's, they have a dividend they're pushing out as well, so that always adds to what you have on here. But look at this acceleration for a dividend stock, where you just go from a price point of 202 to 227. You're up $25 in that time span over the period of basically March 4th, this month alone. And they're in a perfect position, folks. We got stimulus. People are going to be spending money all over the place for consumer staples, okay? When you're talking about consumer staples, you're talking about McDonald's. McDonald's, you put this thing on a 5-year weekly, okay? We're pushing back now. We're above where we were in 2019. The only thing standing in the way, next price point for McDonald's is about $2.32, but quite the acceleration when you look at some of these equities. Even strong dividend stocks like McDonald's. We'll take a look at Walmart when we get back. We'll talk about Archegos and Viacom, Discovery, some of those equities as well. Stay tuned, folks. Be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got 12 minutes to go until the opening bell. Checking out some of the other equities on my radar, always Walmart. And we got some Walmart in my newsletter, Rocket Equities and Options as well. Quite the volatile session on Walmart, backing things up a bit to get the full lows we have when the lows of March, last March, that is, a low in Walmart, you're talking about 102, you rise to 153. Walmart just did a full 50% retracement. Okay, you make a retracement of about the lows actually from that week. We're talking about a low of 126.28. We're up about $10 since then. Walmart, really quite an acceleration when you came out with earnings. They accelerated lower. We reached that 126. We're back a bit. Walmart, another one to put on your radar, folks. They got a lot going on. They're going to be looking at the bank of Walmart, right? They got Walmart Plus. Walmart right now, when you look at what they are, you get into the fundamentals, you're talking about a company valued at $385 billion in context of the number of consumers they reach and the opportunities that they have possible, folks, in terms of converting some of their customers maybe into banking customers, converting some of their customers to the tune of what Amazon has done with Amazon Prime. You got Walmart. Is it Walmart Plus? I think it might be $98 a year, free grocery deliveries, etc. See a lot of potential for Walmart in a big way, and we sitting right at that 50% retracement. Walmart now at 136. You put this thing on a daily. Similar McDonald's, quite the acceleration you've had really since March 5th. You've traded from that 126 low to 136 on basically what's going to happen, folks. You got Americans all over the country who are getting stimulus deals. A lot of them going to use every dollar they get for basically goods and services for their life. A lot of them shopping at Walmart. Not a very sophisticated equation to do the math. Walmart higher this morning as well across the board combined with McDonald's. Now, what else am I going to talk about? So let's get into the saga that's captivated Wall Street for the last couple days. You know, interesting article out here from Bloomberg last night talking about one of the biggest hidden fortunes wiped out in days. And you know, it's all speculation at this point. And you know, as in it's early on in the details in terms of what's coming out over what's been happening. But you're talking about a personal wealth of $5 to $10 billion that's just been wiped out over the period of like a week. But folks, this is a lesson. You try and learn in life from your own errors, most importantly, right? You want to learn from your experiences. but take the opportunity to learn from other people's experiences and mistakes and errors as well, because it's a lot easier to learn from other people's mistakes. And this one is just an issue of tremendous greed, okay? Now, you don't get worth $10 billion after not taking risks in life, okay? So it's okay to take risks. But, man, when you think about levering up to the tune of whether Bill Huang was worth $5 billion, whether he was worth $10 billion, okay? I mean, it got wiped out in days because basically he was leveraged up to the tune of like 6-1 maybe even higher. They don't even sure yet. Maybe he was leveraged up to the tune of almost 10-1, where if you got $5 billion in equity, you're controlling $50 billion in positions. What happens? That $50 billion of positions dips to $45 billion in positions. You only have a 10% pullback, okay? A lot of the listeners out there understand that 10% pullbacks are completely normal. They happen all the time. Well, this gentleman, who's obviously a bright gentleman, to build the family office he had, the wealth he had, was so levered up that a 10% pullback wiped out his entire wealth that he spent his entire life building to the tune of $10 billion. That's what happens, and that's the reason why, folks, regulations, they got a lot of bad press many times for, regulations destroy jobs, right? They hold back growth. Folks, you're seeing the finance industry, you allow one little loophole, like something like swaps, for the ability for a family office like this to be unregulated. They're building massive positions in few equities. They don't have to disclose those ownership positions, even though they have 5 to 10% or even more of the entire company. And meanwhile, what happens? You get a wipeout of epic proportions. So this image sums it up, folks. The value of the portfolio of positions block traded dropped 46% in the last week, erasing 2021 gains. They got all the stocks up here that was happening. You got Discovery in the pink. Where's Viacom? Viacom's in the gray. Do they have two grays up here? What's going on, Bloomberg? Not exactly smart using two grays on the same chart. But nonetheless, you can see the devastation, folks. In terms of March 22nd, you had a combined value of about $40 billion. You fast forward to yesterday, you're talking about a combined value of somewhere in the tune of $20 billion. Wiped out completely. He was in 2012, he was already punished $44 million, basically pennies, to the tune of what this man seems to be worth or was worth before this collapsed. But when you look at, what happens, and I'll say it, this does raise serious questions about the regulation of family offices once again. That's a former SEC aide talking about, who now runs a trade group. The question is, if it's just friends and family, why do we care? Well, the answer's right here, folks, is that they can have significant market impacts. I believe I saw something this morning talking about Credit Suisse says that they may wipe out $7 billion, which is about 2 years of profits for this company alone, just on this position, for loaning him that kind of money. If this is one family office that can do this, folks, at a time when we have the market sitting at all-time highs, think about that as well, okay? This type of devastation on one family office was because, again, it happened with the short selling, right? It's so foolish to be so greedy. Those short sellers were piling into short stocks that already had short interest of like 100%, right? You have Bill Huang piling in 6 to 7 to 8 to 1 leverage on like a handful of stocks that had to pull back. And what happened, folks? The moment they got a quick pullback, the whole thing collapsed. If you don't have regulations, and this is happening across the board, you see a lot of these hedge fund titans, especially when they get in trouble. All right, what do? They say, well, you can't manage. The SEC says we can't have you managing other people's money. We'll just let you run a family office because you have billions of dollars already, pay a $44 million fine, take your billions, manage your own money, and no harm, no foul. Well, we're seeing there is harm, there is foul, folks, and that's at the market sitting all-time highs. What if we got a devastation where family offices across the board are leveraged up using these types of swaps, and you have the S&P trade back down to like 3,400 or 3,600? It doesn't take a genius to figure out the type of devastation that would be possible. And then when you start seeing the devastation that it has hit some of the banks, now, thankfully for the consumers out there, you have a lot of these banks getting it back. Goldman doesn't seem to be too material impacted. Morgan Stanley doesn't seem to be too material impacted. But you talk about Credit Suisse. What's going to happen? I have one of my best friends lives in Switzerland, and he's saying, who covers the costs for a loss like that when you have a bank like Credit Suisse that loses 2 years of profits? Is it going to be the taxpayers? Is it going to be the shareholders of that company? Should be the shareholders, because they're the one reaping the benefits when you take those types of risks and they work out. Not always the case when you're dealing with banks, folks, and that's the problem. That's the reason why you need regulations, because you can't afford to have banks failing when they're loaning businesses like Bill Hwang billions of dollars of collateral at a time when he's over-leveraged, unregulated, building positions, et cetera. It's remarkable, folks. Now, we're going to keep talking about this because I wanted to talk about Viacom and Discovery because, folks, it could be a buying opportunity. And I say it in seriousness. These are both super strong equities. There's a reason why he was in these equities. It was a great play. They're great long-term plays in a big way. But leverage is everything. Greed is everything, folks. All he needed to do was not be so greedy and lever up. But we're going to take a look because already we got Viacom up about $1.50 this morning. All right, we'll put it on a 15-minute here. We reached a low of $39.81 on Friday. We're already up $7 from that low. And Discovery positive as well. $3, $41.23 yesterday. Stay tuned, folks. We'll be right back for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&P is negative by about 10 points right now. Tech stocks, NASDAQ 100 negative by about 60. You got the Russell inching into positive territory, positive by 2 points, and the Dow barely negative, 32,999 on the futures right now. You get the Dow down about 32 points. Checking out where we are in Europe. You got the DAX up about 0.7% right now. FTSE's flat. CAC roll is positive by 0.6%. Over in Asia, positive as well. You have the Nikkei finishing up about 0.2%. Shanghai up about 0.6% over in Asia, with our markets open now. So jumping back to these two stocks, folks, you put it on a daily. And again, as I mentioned, two tremendously strong equities. But if you got to learn a lesson, folks, it is so hard to buy a stock that's going from 30 to 100. Doesn't mean you can't do it, but boy, you better step in slowly and not step in with a full position, because anytime, I mean, this is an isolated situation, folks, but anytime you get this type of run up, I mean, you're at least prone to a 38% retracement, right? And just for, to see the type of moves that you could have had just in a normal retracement after we've had this type of run, you go back to really, I mean, where did we start? Even just the beginning of the year on a company like Viacom, you're talking about a 38% retracement. We were at 100. Easily, we could have been down to $76. That would have been a normal pullback, let alone we've hit 46. But again, if you're looking to build a position in these equities, folks, we don't know the full story of what's going on yet with Bill Huang. It's still coming out. Doesn't mean that we might find out more places that could have to potentially sell, but it does look like the losses have been stemmed. Maybe Wall Street kind of cut all their ties Tuesday, Wednesday, Thursday. They knew this was going on Tuesday or Wednesday last week. They were already talking about it. Some of the big banks were already meeting together trying to figure out a way to save their own butts. Couldn't figure it out by Thursday. By Friday, it was all for themselves, selling out to protect themselves as best they could, and that was the cascade to 39.81. We got Viacom up about 3% today, trading at 46.33. Now, Viacom is Paramount Plus, CBS. You just saw the NFL, right, inking the deal they had. So NFL inks a deal of $100 billion. I think it's $105 billion for the total deal. What do they got up here? $100 billion plus is the deal they're talking about. Now, this is back from March 20th. All right. Now, the NFL, talk about an operation, folks, that's on fire, growing rapidly. They catch a lot of heat. People like to talk about the NFL decreasing and what like. They're signing $100 billion content deals. I think the NFL is doing just fine with their brand across the board. Now, to tie it back to what we have happening with the streaming giants, I'm a bull in Disney out here. Disney's got ESPN, so they've locked in a deal with it. They're part of it. Comcast, CMCSA, they're another big player. They're going to be out there as well. CMCSA, they've had quite the run recently. You put this thing on a daily. From $32, you put it back on the weekly to see the lows. We were down, about $32. We're trading at 55. They're going to Comcast, NBC, right? So Viacom, CBS, they have Paramount Plus. That's going to be a great streaming service. And the point being, I mean, a company like CBS, folks, when you have the NFL brand and you're going to be showing NFL games on Paramount Plus, let alone you're going to have companies like Disney showing it on ESPN, one of the reasons why I'm a big bull on Disney as well. Comcast is going to be a great equity in the long term as well. And then you have Discovery. A little bit of a different story, but I'm telling you, folks, Discovery has done tremendous things with their app. All right, Discovery, whether it's TLC, I think they have in there. They have a number of different brands that are under the Discovery. They're charging $5 a month to sign up. I mean, the way that they've structured this, all right, just with people in my own household, people around, people with cable TV are even signing up for Discovery because some of the shows that they love, whether it's the shows out there called 90 Day Fiancé, folks, there's all these shows, right? They're kind of social phenomenons, whether it's TLC, I think as a Lifetime maybe has a couple of them. I think they have the Food Network on there as well. But they have extra portions of their show only accessible via the $5 a month sign up. Point being, they've done a tremendous job growing their subscriber base for a streaming platform. Discovery, they're not going away either. And you just got a haircut to the tune of almost cut in half. So Discovery's up 3.7% today. You have Viacom up 2.3% today. If you're building a long-term position, folks, you could start to dabble here. I would not step in with a full position. There's nothing to say that this thing doesn't pull back another 10 or 20%, right? I mean, we were just down there. But boy, you're talking about quite a haircut for companies that are both positioned very well to be a streaming player in the years to come. All right, what else we got going on? Let's take a look at some of the stocks that are moving this morning. We got some earnings, we got some et cetera. What do they kick it off with? Well, they kick it off with Discovery and Viacom. We talked about those. I mean, Nomura, so this is where, the carnage just continues with Bill Huang. You're talking about Japan's biggest bank joins Nomura in bracing for Archegos loss. They're talking about only a $300 million loss at their European securities unit. But you see, it just reverberates everywhere. And this is one family office that's not even managing money for anywhere else. Remarkable when you think about the carnage that maybe some of these family offices could do to the just system of banks. And again, folks, this is at market at all-time highs. The market is sitting at all-time highs. That's not usually where you see liquidity crises, okay? Because most people who are levered up, who are worth $10 billion, don't buy like 6 different equities and lever up to the tune of 6 to 8 times your capital, because guess what? They're smart enough to realize that you might get a 5 or 10% pullback, and if you do, it would wipe out your entire net worth of $10 billion in a week. Nonetheless, it happened. Other stocks making moves. This is it. Okay, PayPal. I mentioned it with crypto. So PayPal is going to allow checkout service, allowing U.S. customers to use crypto holdings when they check out at millions of online merchants. Do not underestimate the power of decisions like this by huge giants like PayPal to facilitate the rise of crypto. I mean, look at this. Just from Thursday to today, you're up $10,000 in the price of Bitcoin. We're bumping up against the all-time highs of 61,000, but it's becoming much more mainstream, folks. When you're talking about people are going to be able to use Bitcoin to pay for whatever they want using PayPal. PayPal gets used by so many people across the board. Now, what's really interesting here, right, is that Elon had his start in PayPal before he sold it off. It's just remarkable, that man, what he's been into, what he's come, but PayPal furthering the acceleration of crypto. T-Mobile, they're going to end its T-Vision live TV service at the end of April. Instead, offer its customers discounts to subscribe to Google's YouTube TV service. Looked like T-Mobile figuring out that they can't do it all alone, partnering with YouTube to provide that content. We got earnings going on still. McCormick, they're out with their numbers. Quarterly profit, 72 cents a share. They beat by 13 cents. Revenue beat as well. They raised the full-year forecast. The pandemic continues to see more consumers cooking at home, myself included. What do we got for a symbol here? McCormick. What do we got? Where are we? MKC. That's what it is. There's your acceleration from about 90 to 95, putting this thing on a daily. Quite the acceleration up to 105, and we've been pulling back a bit as maybe the market thinking that some of that optimism had waned a bit, but talk about a acceleration. Now, again, I love my Fibonacci numbers. Let's see what we're working with here. And you're talking about almost a 50% pullback. You've risen now above the line as well, but strong numbers so far from McCormick out with their earnings this morning, up to 95, backing off a bit to about 94. Checking back in on the markets, the Russell looks to be the accelerator right now. Checking in yields. The yields hanging at about 131. We're looking at a 10-year yield right now of 1.75%. Stay tuned, folks. We'll be coming back from the break. We're going to take a look at what's happening tomorrow at 9 in the morning. We got Larry Pesvento. He's got a live trading webinar, folks, from 9 a.m. till 2 p.m. Eastern time tomorrow. He won't be doing his program at noon Eastern time tomorrow. Will today. He won't tomorrow. So he'll be doing that live trading webinar. We'll talk about it a little bit when we get back from this break. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the market sitting in negative territory right now. The Russell back in the red. We got S&Ps down about 15 points. I got a chart of Roku up here. Roku, quite the acceleration during the COVID lows. We're talking about a low during COVID of $58. How about running up to $486? Again, the reason why, folks, so difficult to chase stocks that have expanded to that level, because you might get dramatic pullbacks. And now we're back to 302 right now. We're positive this morning, but we're giving back some of those gains. Roku, I mean, maybe you look right now at a 50% retracement. You're talking about 271.28. If you're willing to step into Roku, might be a price point that you could. You've already got a $186 discount from the highs that we made back in February 15th. This is a weekly. Pull it up on the daily. It's been quite a rocket ship to the downside, folks, but 271 might be an entry that I would look to. Now, what I want to pull up next reminds me of CrowdStrike, also one to talk about, pulling it back on the 3-year weekly. We go from $31 up to $251. Now, the interesting thing here, looking at CrowdStrike, you have one move here, which is the full move we had from March 16th up to the highs that we made on February 15th. Again, this is a weekly, all right? And we're right back to almost a 38.2% retracement, okay? That number about 167, we're trading at 170. Now remember that. That is the retracement from the full level of March 16th going up to the highs that we had on February 15th. We've pulled back about a 382 retracement. Now, folks, confluence is when you take two differing trends and they line up on similar areas, and you have a confluence of two different Fibonacci retracement areas. Now, what I'm going to do is I'm going to take the run that we just had starting, and really, I'm going to put it in a daily so you can see the run we had starting on November 10th, okay? You check out that run, and we are now back to exactly a 618, folks. So you have two different retracement zones. You have a 618 retracement of the trend that began on November 11th, and you have a 382 retracement of the full run that began at the March COVID lows. That's an area of confluence, folks, okay? And that confluence area is sitting almost right where we are. You're at a 61.8% retracement of the shorter move. You're at a 382 retracement of the larger move. Could be a nice area for CrowdStrike. They're going to be a popular company, folks, when you think about in terms of what this company does. They provide cloud-delivered solution for endpoint protection. You're talking about platform compromise, two integrated technologies, lightweight agent and threat graph. Whatever they're talking about security, folks. They're talking about security for IT, for managing threat hunting, etc. And this company right now, CrowdStrike, you're talking about a $38 billion company, but quite the pullback we've had as I lined it up, two areas of Fibonacci retracement, the 618, the 382 of the big move, and we're lining up right at about 170. And talk about a haircut, $80. You're talking about 30%. We've gone from that high of 251. And again, you can learn a lot from this market, folks, in terms of not chasing some of these stocks that maybe get ahead of you in a big way, up to 251.28, back to about 170. We started this conversation because Roku, they got an upgrade. But even with that upgrade, with a negative market, you have Roku shares giving it back. We're basically back to flat at 302.03 right now. All right, what else we got going on? We got a big day tomorrow at TFNN, folks. Larry Pesavento. So he's coming up noon. In 2 hours and 15 minutes, he'll be doing his program at noon Eastern time. Then tomorrow, 9 a.m. Eastern time. Still time to sign up for this, folks. Larry's hosting a live trading webinar, Trade What You See, 9 till 2. He'll be in there for 5 hours with those that attend. Now, the cool part about this is that if you signed up and attended the webinar that Larry did most recently in December, you're going to get to go to this webinar for free. If you're just signing up for this webinar, the cool part about that is you're going to have a community of people in there that have already attended one webinar. There's going to be a lot of great traders in there, in the trading room, talking about markets, asking Larry questions, etc. Should be a great event, folks. It's $295. In that $295, though, is included a month of Larry's newsletter, which is a $97 value. So really, you're paying less than $200 for a 5-hour live trading webinar. That webinar will be archived. You can watch it as many times as you like on your account page at TFNN. Check it out. You gain access to Fibonacci 24/7. And for you current subscribers out there, you gain a free month of that newsletter as well, which you're already paying for. So a great value. Trade What You See. Live trading webinar with Larry, kicking things off at 9 a.m. tomorrow. I encourage you to check that out if you have not already. Jumping around to other headlines out there, Apple always making news. So the Worldwide Developers Conference looks to be happening June 7th, and the headlines out there expected to unveil new iPhone, weren't we just talking about the last new iPhone? A Mac and watch software on June 7th in a virtual event. Worldwide Developer Conference, or WWDC as they put it, is where Apple typically unveils its new iPhone, iPad, Apple Watch. That's where they break it all out. That'll be happening on June 7th. So you're talking about 2 months away. And the event runs through June 11th. And it's free for developers to attend. Apple shares trading lower, down 1.6%. You get the NASDAQ trading a little bit lower on the open as well. Checking in on some of the markets as we have a little bit of volatility to the downside to kick things off. You got NASDAQ 100 down about 0.9%. S&P's down about 16 points. The Dow off 77. Checking in on some of the FANG stocks right now. Amazon pulling back down about 0.8%. Microsoft shares down 1.4%. A little bit of a pullback going on at the opening bell. Checking in on yields. Yields hanging right at about 1.75%, but as I mentioned, 1.75%. My goodness, folks, quite a change we've had since the August numbers of last year, where we were talking about a 10-year yield of flirting between 0.5%, 0.5, and 0.6. All right, what else we got going on? Jumping around to some of the stocks moving that we had with action. And what do we take a look at? Let's see, where do we go next? Let's jump around. Okay, so one of the other companies I like, Uber. So we've had quite a little pullback on Uber shares here. Folks, you know, if you're a long-term player in some of these equities, right, you have to be aware of the type of volatility that we have when you go from Uber trading from 40 to 13 to 64, right? You put this thing on a weekly, and it really doesn't look like a pullback. Yes, we've pulled back $12. You've pulled back almost 20% from these highs. But when you get some of these growth companies, you're basically just at a consolidation near all-time highs of between 50 and 60. You put this thing on a daily, you're chopping around between 50 and 60 on Uber. You got a little bit ahead of itself at 64.05, but nonetheless, I mean, Disney, similar deal, right? Disney, we've now backed off to the tune of about $20. You've taken a 10% haircut in Disney, but we just traded from, even on this chart, you're talking about $92, and I don't think that's the COVID low. I think it was a little bit lower. $79 was the low for COVID. You put it back on a daily, and yeah, you might see it chop around. If you're in Disney, we have some Disney in my newsletter for full disclosure, but this would be an area that you want to see hold. This 183.40, that's been an area that was was resistance originally, right? And now it's turned into support. Whether it's we gap above that level originally, we've come down here once and bounced, twice and bounced. Look for it to bounce a third time at about 183.40, that price point for Disney, holding up a little bit of strength there. Checking back to some of the commodities, gold down about $30, holding at that level. As I mentioned at the top of where we are, gold, this is going to be a critical level for gold here. We've seen it be support early on during COVID. We've seen it bounce off this level once, and we're flirting with that 618 retracement of the entire move we had on gold, going from a low during COVID of 1450 to 2089. You got gold flirting with that 618, which is right at about $1,700. We'll see if we can get back above that level at any point today. Gold trading down $29 at $1,685 right now. All right, folks, stay tuned. Come back after the break, finish up the program. Still time to give us a call if you'd like. 877-927-6648. Right back in a few minutes. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets in negative territory. We get the S&P is down about 16 points right now, trading at 39.42. All things considered, folks. Putting it back on the daily. I mean, talk about sitting right near all-time highs. Yesterday, we closed within about 15 points of the all-time highs in the S&P, trading at 39.78. That all-time high back to about March 18th. We were up at a close yesterday. You're looking at the close in the S&P, 39.63, negative just a bit with some rising yields. Crude. Quite the acceleration in both directions. We get the Suez Canal back open. You have crude trading to $60.65 and checking out that gold contract again. Down about $29 right now at $16.85 for the price of gold. Jumping around to The note and bond sitting same deal. I mean, some slow action so far this morning. Since we've been on the air since about 9 o'clock, you have the 10-year down about 9 ticks right now. You're talking about a yield in that 10-year of 1.742%. One final story we'll finish up on. Non-fungible tokens, right? Is that what they're NFTs? The story was out there for that $69 million purchase. I mean, it's pretty tantalizing, folks. I mean, people writing this stuff. I clicked on it, right? It's almost like a clickbait article. Of course, they're going to write about somebody who purchased basically a digital JPEG for $70 million almost. And he's saying that he would have paid more. I just don't understand this one at all. The story was out there last week, right, that you had a New York Times article. Basically, the guy just wrote a New York Times article to say, how much can I sell this for as an NFT? And then he put it out there to bid for an NFT and sold it for $500,000. They're going to give that money away to charities that the New York Times supports, I believe. So it's not like the writer made that money. But it's only worth what you can find somebody else to pay for it, folks. And it's becoming a lofty area where you get NFTs. Bitcoin is one thing, all right? You got companies like PayPal saying you can use Bitcoins to facilitate real commerce. That's one thing. NFTs, you just better have a plan to sell that to somebody else in the next 6 to 12 months to make some money, because I don't know if a NFT for a Beeple painting is going to be worth $70 million in a couple of years or not. All right, folks, thanks for tuning in. Thanks for starting your day with me. Don't forget about Larry. Check him out on the front page at TFNN.com. He's got a live trading webinar coming up tomorrow. He's got his program coming up at noon. But don't miss Mr. Basil Chapman. He's coming up next, live with the Tiger Technicians Hour. Live programming all day at TFNN, folks. Stay tuned. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't